Hi, everyone, and welcome to this week's episode of Money Moves. Every Sunday, I go over one of the most important news articles of the week, and this week's news article is the Fed is calling for more stimulus. However, analysts are unsure if it's going to happen. And then this week, I'm going to add a little segment about where I think the market is going to go in the next week. Then I will go over each of my investing accounts, starting with a brief overview of Yotta. Then I will go over my Worthy Bonds account, as well as my taxable Lending Club account and my IRA with Lending Club. Then I will go over my Fundrise account, as well as an update on one of the projects in my portfolio. Then I will go over my M1 Retire account and my higher yield savings account. And normally this is where I go over my active options positions, but instead I'm just going to give an update on my options portfolio. And if you're interested in my individual options positions, I'm going to start doing a separate episode for that. Then I will go over my week-to-week tracker. And as always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying this 6-bed, 9-bath mansion in Spokane, Washington, or if you want help achieving whatever your financial goals are, definitely like and subscribe. The interior styling is pretty awful. And for some reason, it has 3 dining room tables. It has rooms you're not meant to go in, and this theater or lecture hall or I don't know. It's currently on sale for $3.8 million. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. So the Fed is calling for more stimulus, but the analysts are still weary. The Fed Chair, Jay Powell, urged Congress to provide the U.S. economy with more fiscal support due to the ongoing impacts of the Rona. He says many borrowers will benefit from the programs as well as the overall economy. He does not suggest that it's a loan, as a loan might be more difficult for some people to pay back, and he says that direct fiscal support may be needed. This would be something like the stimulus checks that we received in the past. And as a trader and a market watcher, I think we definitely agree that the economy could use some more stimulus. And I think that's part of why we're seeing a little bit of a downtrend now. The overall consensus was a $1 trillion minimum stimulus. And since that has not been passed yet, the market is starting to sell off. The analysts say they are seeing a bit of a reversal in September because the CARES Act 2 is not being passed, partially because the Congress is focused on different things like the unfortunate passing of Ruth Bader Ginsburg, and it seems like they're focused on replacing her as soon as possible. They say they were optimistic and hoped for a V-shaped recovery, but without more stimulus, they don't think that's going to happen. Another analyst said they thought the downturn in the stock market would force the Congress to get their act together and finally pass another stimulus bill. But then he reiterates the issues with the Supreme Court and trying to replace RBG. He feels like it's less likely. He also mentions that the Fed is now downsizing its balance sheet. It peaked at $7.2 trillion and is actually down $150 billion since then. The takeaway here is that a distracted Congress means no stimulus, and Jay Powell thinks that stimulus is important for getting the economy to recover. And looking at the S&P 500 here, you can see we were on this long-term uptrend. We came down and bounced off this trend line repeatedly, and then we broke through it right here. And since then, we've started downtrending. We came down and tested this trend line here, and we are right now right on that trend line, and I think we're going to get a bounce to the downside. Scrolling in here, you can see we're right on that same point, and we also bounced off of this 100-day moving average, but we have not yet tested the 200-day moving average. You can see the 200-day moving average was support before. We broke through it right here. We came back and tested it, came back and tested it again, and then we moved up. So I think we're going to at least get a test of that 200-day moving average, which right now is at $310 per share for SPY. Looking at the MACD down here, you can see we did get a little bit of a retraction in the MACD just because of that last day on Friday. There was a little bit of an uptick, but we haven't hit that 30% level in RSI yet, and I suspect we're going to hit it before we see any kind of uptrend forming. Definitely let me know down in the comments section if you think I'm right or wrong. So moving on to Yotta Bank. This is a new account that I just opened this week, and it's going to take the place of my CIT Bank savings account. CIT Bank continues to reduce their interest rate because it is based on the Fed rate, whereas Yotta Bank is going to do a slightly different business model. Their mission is to make it more exciting to have a savings account And they're basically mixing the idea of a lottery and a savings account. So they're going to do weekly drawings and give you the chance to make more money. They do have a set minimum at 0.2%, and I'm going to do a deep dive on Yotta savings in the future. Moving on to worthy bonds. I have been withdrawing the interest every single month, but since the markets have been pretty volatile recently, I'm going to leave this money in here for now. And once we see a little bit of a reversal, I think I'm going to withdraw this money and move it into my trading accounts. But until then, I'm just going to let this sit here for now. It's good to have some less volatile investments during some particularly volatile times. If the idea of a stable 5% that compounds daily is interesting to you, there is a link in the description that gets you one free bond when you fund your account. Moving on to my Lending Club account, this one went up $55 this week, which is pretty exciting because it did break that 18,000 mark. My initial investment for this account is just over $16,000, so I'm up almost $2,000 since I started this account. I had 3 notes that were in grace period that were paid, which is pretty good. That's what you like to see, those notes in grace period getting paid off. One of them moved into the 16 to 30 days late period, and one of those moved into the 31 to 120 days late period. I focused almost exclusively on C-note loans. I believe I took one B-note loan this week, maintaining that weighted average right here at 16.55%. It's good to look at this. So every time you take a new loan, obviously it's going to affect your weighted average. So understand that if you take a loan that's above this rate, it'll raise your average, and below it will lower your average. So that's one of the things that I use to select loans. And I like to keep this right around this range. Looking at the term, I'm still short of that 75%. Again, another indicator that I'm trying to seek out those 60-month loans in order to get this back to 75%. This account continues to do well, receiving a 10.78% annualized rate. Moving on to my IRA, it actually went down $6 this week, and that's because I had 3 notes go into grace period here. May just be the weekend, and these may be processed and paid early next week, but I'll have to wait and see. Otherwise, the late categories stayed the same. I focused again on C-note loans and a few B-notes this week. My weighted average stayed the same at 16.87%. And then looking at term, I got a little bit closer to that 50-50 split, which is my goal for this account. This account is also doing astronomically well, receiving a 36.41% annualized rate. And I still don't think this is going to last, but it has already lasted longer than I thought it would. Moving on to my Fundrise account. It went up $8 this week, and I continue to maintain this same goal. I might raise it up because I have to limit this investment to 10% of my net worth, which are the rules for this type of investment. Briefly looking at my transactions, you can see my monthly deposit of $500 did clear, and my portfolio is still 13% debt, 87% equity, which is normal for the long-term growth plan. Equity growth is shown as appreciation, and as we come up to the end of third quarter here, the appreciation will be assessed usually in the first or second week of September, and I should see what the new appreciation value is. Moving on to a project update, the Savannah area apartments have completed their construction, and this is a project that returns 12% annually. They say in November of 2018, they invested $7.5 million in a 316-unit apartment building in Pooler, Virginia, just outside of Savannah. They say the construction on the apartments is officially completed, and the first resident buildings were certified for occupancy earlier this year. Roughly around 54% of apartments have been leased already, which is right on track with what was projected. Once the apartments have been fully leased, the project sponsor will secure long-term financing to pay back the initial investment, at which point the $7.5 million will be released to be invested in future projects. This project returns a 12% annualized rate because it is structured like debt, meaning that it gives a consistent rate of return until the entire sum is paid back. If you're interested in investing in projects like that return 12%, there is a link in the description that will get your investor fees waived for the first 90 days. Moving on to my M1 Retire account, it was down 1.5% this week, or $162. The graph shows that it went up this week because I did invest $300. As the stock market started to go down, I did start to reinvest into some buy and hold type stocks. And I think at this point, we're starting to get into the price point where some of these stocks are a good value. Looking at the holdings, tech was actually up a little bit this week. They've been beaten down pretty heavily. Dividend ETFs were down with the rest of the market. Healthcare and industrials were down a little bit as well. I think I'm going to sell some of these short-term government bonds to start buying a little bit more equities at these price points. Finance did not do well. There was an announcement that some of these institutions might be involved in some money laundering plots, so that really drove these stocks down. And then real estate was the worst this week at down 5.5%. Moving on to activities for this week, Dominion Energy paid out, United Health, Global Payments, the Vanguard High Dividend ETF. You can see I did buy some stock this week, $321 worth. Bank of America paid out, and then Lockheed Martin. Looking at stocks that were purchased, I did buy some Google, a little bit of Citigroup, Schwab High Dividend ETF, and then International Select Dividend Fund, VOO, which is just the S&P 500, VYM, which is Vanguard High Dividend Fund, and then VUG, which is the Vanguard Growth Index. It is worth noting that I don't select these particularly. I just put in the overall percentage for my account, and then as I put in money, it distributes that money to get as close as possible to the allocated percentage. Looking at my higher yield savings account, it was down 1.2%, which is quite a lot for this account since it is mostly bonds. Looking at the holdings, VIG was down a little bit less than the market. Realty Income, this was the bulk of the losses at almost 4%. This is a pretty large holding at almost $1,700. And then we have all of these dividend funds. Looks like DIV was down quite a bit at just over 4%. Everything else was reasonably down, as could be expected, since the overall markets were down this week. The only dividend that was paid out this week was the Vanguard High Dividend Yield ETF, or VYM. Moving on to my active options positions, it says I was up 1.8% this week. I'm not sure where they get that math, since I was at around $19,000 account value at the end of last week. And you can see that here on the monthly view. I was just over $19,000 here, and I finished the week at $18,341. So I was down almost $700 on the week. So I'll just have to keep track of it my own way. Just for reference, you can see the S&P 500 was down 4.82% on the month. So I'm down just over 2% more than the overall market. Taking a look at my Tasty Trade account, I did deposit $1,000 into this account this week, which means I'm down only $6 on the week. I think the reason for that is because the tools on this platform allow me to make better decisions, and I'm thinking about moving all of my Robinhood money over to Tastyworks here in the near future. Looking at my week-to-week tracker, stocks did go up just a little bit in terms of value. This is only because I did deposit money into my stock portfolios, not because stocks actually went up. Bonds were flat. My trading accounts went up this week. Again, this is because I added money to them. I did actually lose money in my trading accounts this week. REITs stayed flat. Lending Club went up just a little bit. And then my cash went down. This is because I did invest some of that cash, as well as normal living expenses. Looking at the percentages here, you can see I did spend some cash. Most of this was moved into my trading accounts, allowing them to go up just a little bit. Overall, stock went up as well, bonds went down, REITs went down, and my overall portfolio went down 0.4%. Let me know down in the comments section if you have any questions on any of my investments. If you like any of them, there are links in the description that get you free stuff when you sign up with them. Definitely like and subscribe if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment purposes. And with that, let's get to the jelly. So today's jelly is Bill Hader breaking while he's on SNL. So here's some clips from that video.
If you're looking for a place to relax with an old lady, look no further. New York's hottest club is Spicy. Opened in 2017 on the Upper East Side of a dumpster. This 24-hour bitch fest is the creation of club owner Rabbi Jude Diamond Phillips.
What is a human kite?
It's that thing where you tie a string to a midget and a windbreaker and then run through a field.
That's fun.
This place has everything. Kufa hats, congas, MTV's Dan Cortez. This place has everything. Asbestos, lupus, the magazines at Supercuts, Dan Cortez.
What's a human Roomba?
It's that thing of when you put a midget on a skateboard. So you put a midget on a skateboard and it slides around on your floor eating garbage.
Obviously, he has a hard time getting it together. It seems like the SNL writers are writing surprises into his script, and he's learning about them on set, which makes it even more difficult. If you want to watch the full video, it is linked in the description. Comment down below what you thought of it. Definitely like and subscribe before you go, and have a great day.